The next session is a panel discussion led and moderated by Guy Futi. Guy, there you go. Hi, Guy. So the panel will be discussing African fintech going global. And Guy is the co-founder, Star Kitchens Group, a technology provider catering to the needs of African restaurants and startups. He has worked for the Jumia Group as a managing director, Iroko Partners as a growth manager, and was the founder of Magi Water, a social enterprise with water alleviation efforts across the globe. Guy will introduce the members of his panel. Can I hand over to you? You've got 40 minutes.
Hello, everyone. How are you guys doing? Okay. All right, let's get some life here, okay? All right, so very, very excited about this panel, FinTech Going Global. So I'm Guy. As mentioned before, I used to work at Jumia as a MD. So one of the things, one of the products, if you're familiar, is obviously Jumia Pay. And there's been a lot of great fintech innovations coming out of Africa. So I'm very happy. I'm going to call them one by one. They're going to come in. They're going to introduce themselves, and then we're going to get started with this discussion. So first up is Lou. Can you come in, introduce yourself, tell us all about what you're doing? By the way, I love this company.
My mic on? Not yet. There we go. Lou Markle. I'm a technologist. I was born in South Africa, raised on the African continent. I lived in Kenya. I lived in Ghana. So I know a lot about Africa, and I've got a feverish passion for my continent and innovating on that continent. And in that line, we've created democratization tools, financial democratization tools. What we've started with was democratizing investment, making it possible for the man or the lady on the street to invest whatever they can afford in either listed assets or whatever the asset is that backs that investment. We've then, instead of going out and trying to run this race on our own and creating our own brands, found a very willing partner in some of the banks in Africa. So we supply our technology, which is mostly fractional investment technology. We bring that to banks, banks partner with us, and we take it to markets currently in East Africa, etc.
Sounds very, very interesting. I'm going to have some questions for you later. Next up, we have Dare. Am I pronouncing that right? You are. All right. Come here, Dare. So Dare leads MFS, and he's going to tell us all about MFS.
Hi, I'm Dapo Cuju. I'm the founder and CEO of MFS Africa. We have built and operate the largest digital payment network on the continent, touching almost 40 countries now, 320 mobile money users. The change we seek in the world is to make it possible for you to transact whenever you can call. So if you pick up your phone now and you take it for granted that you can call someone in Djibouti, we want you to take it for granted that you can pay that person as well.
Oh, that's very neat. All right, next up we have Grant. Oh, sorry. Sorry.
Other Grant.
The other Grant. Okay, how are you doing?
Good.
So please introduce yourself.
Thanks. My name's Grant Kriel, founder and director of Bayport Financial Services, a global leader in emerging market at-source deduction credit extension. Bayport has been operating for about 20 years now from quite a clunky bricks and mortar physical distribution business at inception. When we started, the African landscape was obviously, the ICT infrastructure was very different 20 years ago to what it is today. And whilst not per se a fintech business, we've embraced the best of technology to power up our financial services business over the last few years, particularly through COVID, which has been a hyper accelerator of this journey for all of us.
All right, and then Ron. All right. Here you go, Ron, introduce yourself.
Yeah. Hi everyone, my name is Margulies. I lead the sustainable financing for Minumadin Group. Minumadin invests, operates, and develop infrastructure, including financial institutions. But my background really comes from investing in early stage fintech companies in the continent. I used to be at the IFC, then the board of the World Bank, and some of the investments on the fintech side, sort of my fame to claim, is into what companies provide products and services to primary needs, whether it's clean energy, pay-as-you-go solar home system, or clean cooking, the two exits that our venture capital has achieved. So happy to discuss that aspect of fintech as well.
Okay. And next up, we have Chijoke from Carbon.
Good afternoon. My name is Chijoke. I'm the co-founder of Carbon. Carbon's a digital bank in Nigeria. Our vision is to be a Pan-African digital bank for Africans and the diaspora. And our thesis is that banking is broken for the mass consumers in Africa. It's expensive, and a product like Carbon is one that allows us to reach customers, wherever they are. And in a convenient manner. We have over 3.1 million users. Yeah, that's happy to be here.
All right, that sounds good. All right, so we got a couple of questions, the format. I'm going to start with 2 questions, then maybe open it up to the panel. And I'm not going to pull any punches. So here's the first question, and take anyone first up. So the African fintech sector has been red hot. We're seeing record level fundraising. We're seeing Silicon Valley type valuations, meaning by that pre-seed, no revenue, companies, a bunch of 20, 30 million right out the gate, right? And on top of that, some put its claim that we're entering this sort of like golden era and it's only gonna go further. One interesting trend that I've personally noticed is the growing number of African companies now looking to go beyond the continent. Right. So my question to you, if you agree with the statement or disagree, please let me know, is do you think that if you can make fintech work in Africa, you can make it work anywhere in the world? Who wants to go first?
I think so. I think if you can find the funding to make it work in Africa, and you can build your business and you can get proper traction and understand and learn from your markets, then there are many other developing economies in the world that you can access after that, after Africa. But I'm asking why. Africa is probably the continent with the most opportunity right now of all of the continents in the world. It has so much untapped opportunity, and especially with the technologies that are up and coming and the players and the ideas that are being implemented. There's just so much happening on the African continent that it'll keep us busy for the next 10, 15 years.
I actually disagree. First of all, I think it depends how we define Africa. And I'm well aware that for many outsiders, especially these days, Africa is being equated to Nigeria. So, whereas we all know that, it's almost a different life when you cross that border in Semen and move to Benin Republic, right? So I think we all agree to call this thing Africa, but it's actually a collection of markets. Some of them are really, really different. The way you operate in Gambia is quite different from the way you operate in Madagascar. So I wouldn't assume that if you get it right in a handful of markets that you could pitch as Africa, automatically qualify you to understand how business works in Bangladesh. So I'll be more cautious about that. I do think, however, that make it work in Africa in itself is actually quite complicated, and we haven't actually seen many examples of that yet.
Yeah. Just want to point out that Dare is from Benin and Chijoke is from Nigeria. What do you think, Chijoke?
Yeah. So I agree that Africa is challenging in the sense that take our business. We have to interface with so many regulators in different markets. And that in itself, it takes anywhere from 7 to 15 months to get a license. if you're setting up, if you take a company like Revolut, you can be in one EU country and it's your license is passported to several. So in that level, I think anyone who can basically operate in, let's say 6 or 7 regulated markets in Africa, has probably spent a lot of time on things that her counterparties will not have to have done in Europe, etc. Or take America, it's a huge market. Africa is, Nigeria is big, but it's not big enough sometimes for some of the investors. You need to actually scale up. And I think that a lot of African fintech founders, we spend a lot of time on things that I would say our counterparties don't have to do in other markets. And so I do believe that if you can be successful in our markets, then you have a very good shot of doing that elsewhere.
What do you think?
Man, I hate this term fintech. I think it's a terrible term. Whoever invented it, I think, has got a lot to answer for. Fintech clearly is made up of 2 words: financial and technology. And I think what Chijoke was touching on, I think everybody was kind of touching on. I think there's 2 levels to this conversation. I think the African fintech scene has seen huge success and masses of capital flowing into payments type businesses that you'd categorize principally as technology businesses with, I think, a relatively light touch regulatory and kind of consumer facing challenge attached to them. And then I think there's a whole world of financial services businesses that are powered up by technology, that aren't necessarily differentiated by technology, but are powered up and made more efficient and made more accessible by technology. So I think there's no reason that, and we saw to the growth of the mobile money phenomenon, which was largely credited to East Africa at its kind of global, coming of age. I think I've seen examples around the world where Empesa type mobile money capabilities have successfully transported even into developed markets in some cases, although less successfully. But I think that's kind of in the ambit of this payment universe, which is a technology universe principally to my mind, not that it doesn't have business challenges to be solved. And I think that is genuinely exportable. Having said that, hugely commoditized across the globe today. So I'm not really sure what the African technology competitive advantage component is anymore. But I think the question is more appropriately focused on financial services businesses embracing technology to expand and improve their business models. There, I think I agree with Chijoke and somewhat with Dara as well. My experience from a Bayport perspective is every country is unique. Regulatory constraints mean that you've got to focus kind of more intra-country. It's not so much about the tech you're developing. Hence, my answer would be not that easily exportable outside of Africa. And I would kind of agree as well with Lou and say, well, who really cares? There's so much opportunity inside Africa still that we could all spend a lifetime focusing on that very comfortably.
Yeah, that's the risk of speaking last in the panel when you agree with everyone. I wouldn't reiterate the points. I will say, though, so the question is, if you made it in fintech in Africa, is it scalable? I think the resounding answer is no. I would probably also challenge the assumption that there are many success stories in fintech or, in a matter of fact, any startup across the continent. There aren't too many examples of successful Pan-African companies because of all of the reasons that were mentioned before me. So I do agree with, if you are successful in your home market, and again, I'm based in New York, so it's, scaling from Nigeria, especially in fintech, is not as easy as scaling across the border because of the regulation and everything. It's not as, scaling from New York to San Francisco. But I do agree, if you are successful in your home country, you probably have demonstrated as a team the resilience, the entrepreneurial mindset, et cetera, that you have those, and those can definitely be exported elsewhere. So I will give that.
So just if I may add to this, what Dari said is very true. If you take Empesa as an example, we all know how hugely successful that was in East Africa. But trying to port Empesa to South Africa, it nosedived within, I think, 3 or 4 years. I don't think they managed to, and there was a bank in South Africa that supported Empesa in South Africa, and they didn't manage to sign up more than 200,000 people. And that's the differences between the countries and how difficult it is to move from one country in Africa to another country in Africa. It's definitely not as clear-cut as saying, I'm an African fintech, therefore I apply everywhere.
Yeah. And just, I don't know how much we still have on this question, but one way we could rephrase the question is, is there an opportunity outside of Africa, right? And you could argue, like, if you are successful in Nigeria, I mean, how really do you need Benin? I'm from Benin, and I'm still saying this. So it's so small that if you are successful in some of these markets, you could ask yourself, okay, what is the next logical market? And when you look at what the characteristic of those markets needs to have, they may actually not be in Africa. You may end up in Brazil, you may end up, but I don't think the success in Nigeria tells much about your ability to succeed there, besides what you said, of course, like the resilience, the good entrepreneurial spirit. But businesses are not just, product, they're also product of context, they are product of culture, they are product of underlying assumptions that sometimes we cannot even write down, but they're just in us. And I think that sometimes makes big difference. And if you don't have that, you might find it difficult to succeed outside.
If we have time, I can expand on that a little bit.
Yes,
so my home country, Israel, where I cut my teeth in the VC industry, I think is a good example of how entrepreneurs, whether it's fintech or elsewhere, from day one need to think about a global market. For various reasons, it's a very small local market. The neighboring geopolitics obviously prevent you from trading with your neighboring country. So the entire ecosystem is geared towards successful ventures in North America, in the European Union. There was a comment that Nigeria is not a big enough market. Well, if you compare it to smaller markets like Israel, it's a huge market, which in and of itself, you can build a very successful, resilient company. Therefore, the incentives and everything that follows from it, meaning the ecosystem, the venture capital industry, the institutional investors' appetite, et cetera, is more limited. So it all goes together into how much incentive and how much you are building your home-biased country towards or a global or a pan-African product.
I think you see a bit more of that in Kenya, where, and again, probably because the mobile money sector really started out of Kenya, I think you see a fairly a pan-African kind of mindset and a lot of service provision as well. There's another layer to the fintech discussion, which is actually the product providers and the various companies such as what you guys are doing as well in terms of supplying product to financial services, fintechs. So I do agree with you, Ron. I think the place that I've seen that, certainly in South Africa, I've seen businesses being built more with an expanded global type of mindset. But the truth is, when you're operating in Nigeria, Chijoke, it's you're first and foremost solving Nigerian problems relative to your market and your consumers and your customer base, your regulators, which is a natural delimiter.
Okay, so since I'm moderating, I'm going to ask a burning question that I've always wanted to know. All right, so as an operator, you're starting your business and you're trying to explain the model to people outside of Africa, right? And I've personally found, along with other startup founders, that the language that you speak to someone outside of the continent is much more different than the language that you speak to your peers. For instance, when you're talking about the product market fit, right? Or when you're talking about the eventual consumer. An example of that would be to someone outside of the continent, outside of the operator. You would touch upon, this is applicable to every small shop and everyone. But the language that you would speak to a fellow operator who knows, you're just like, yeah, I've got these 10 vendors and they're pushing 80% of my growth, and they're really going to make me a unicorn, right? So do you agree with what I've said? And if you agree or disagree, why? And lastly, do you think that there is a way where we could all speak the same sort of language to each other and people would get it? You went last.
Yeah, no. So There are a few assumptions here that might worth decoupling. I think, first of all, everyone comes from their own experiences, right? So obviously, I will agree if that was your experience. I think, having been investing in the continent from the outside for the last 15 years, I definitely see more and more sophistication on the investor side. It's not to say that you don't see new investors, but by and large, international investor buying into the opportunity on the continent are very well versed in the nuances of the opportunities. But I think what your point is maybe inadvertently or hiddenly suggest, and that's my personal opinion, is that you definitely don't see enough participation from local institutional investors into the tech industry, let alone the fintech. And that's definitely going to enrich and going to further push the building of the ecosystem. And I think that's the key missing ingredient in really making all of this work together. So that has been my experience.
Very nice. Would you like to go next?
Yeah, I think kind of when you're selling the African fintech into the rest of the world, I think if the root problem that you're trying to address doesn't resonate, then I think you've got a problem to start with. So I would hope that actually taking a concept from here and communicating that outside of Africa to other people, that you've already done your homework and you know that there's a need and that need resonates. And whilst you still got to compete like mad to actually get your voice heard, I would hope that the fact that the product was developed in Africa in and of itself wasn't a delimiter to getting the message across. We had experience trying to take a business concept from Africa into Latin America, which we did so sort of successfully over the last decade. And that's a whole different world of translation problems, just from a language and a culture perspective. But again, the kind of root product resonated, and we managed to get our message across and succeed as a result of that.
I mean, speaking from personal experience, and especially in fintech, I do find that sometimes it is easier to compare what you're doing with another product that investors are familiar with. But the challenge with that is, that model might not be applicable in our markets. So for instance, we talk about, take Nigeria, instant transfers are a norm. It's a normal thing. In America, it's not. It's not a normal thing. So saying I want to be like the PayPal or Zelle doesn't really apply, because everyone can do instant transfers in Nigeria. I think that sometimes we've had challenges convincing an investor outside because they actually haven't done enough work to understand the context. And it's a big problem. And the only way I think that we can solve that is if we do have more local investors who actually understand the context and why we need the product we need, and we don't have to say we're going to be the X of Africa or X of this, because that investor will understand that yes, this is a peculiar problem, and you're solving it. So I think because personally, when I look at some of the fintech deals that's happening, at least in Nigeria, and you look at TechCrunch and you're seeing it's X of Africa, and I'm like, actually, we don't have that problem. But we don't have that problem. But it helps. But if it helps, if it helps my fellow founder raise money, then great. But I think I do think that investor hasn't done the work to know that this is not applicable in the market.
So to be clear, we're saying that Carbon is not the N26 or the Revolut of Nigeria.
Actually, that's a good point, because we're a credit-led digital bank, and a lot of investors talk about they don't, credit, don't like it, let's do transactions. We're in a market where interchange is like 15 basis points if you own the bin, right? Chime in the US, et cetera, I think they get like 1 or 2%. So you're in a country that's relatively less affluent than countries in Europe or America, and you're fighting over 15 basis points. And by the way, this is a market where, let's say, only 300,000 credit cards and only 30, 40 million debit cards. So you can't build a sustainable business copying a Monzo and Revolut. You just can't on transactions alone, because people don't travel as much, so there's no foreign currency. They don't use their cards a lot.
And equally, they couldn't bring that model into Nigeria.
Yeah, absolutely. Exactly. But if you then say, I want to be a digital bank and it's credit-led, don't like credit. But if it's a transaction-led, oh, that's great, but it's not going to make money and it's not going to be sustainable. So that's what we battle with all the time. And I think only people who understand that, interchange. I mean, once we had a potential investor, and for some reason, he thought interchange was 4%. So he spoke to our bankers and they said they get no interchange on transactions, and the phone line just went dead. And I think again, it's local investors will understand this, and I think that's why we need more local investors, and it's pleasing to see that with a lot of new rounds and new unicorns in Africa, we're seeing more interest from angel and local investors coming in, because they now understand that you don't necessarily have to win by getting an exit, but just having more people come in different rounds, they can exit. So that's what it's good to see.
Yeah, I mean, I will agree with most that have been said. I think, again, first of all, we have to also, there's a time factor that we forget, right? So obviously, each of us wants our company to make it, and to make it quickly. But I also believe that collectively, what we want is to advance prosperity. I don't think we are doing technology for technology, right? And we have to understand that it will take rounds of ecosystem evolution. So we are probably generation 1 or 2, right, of kind of tech ventures on the continent. But the key element is local context again, and investors that understand, and who better can understand than people who live there. So that's one of the reasons why, quite controversially, MFS Africa, we started investing from the money that we were raising in 2018. And, a lot of people were like, why will you do this? I said, well, actually, we are better placed to manage the asymmetry of information and context between the investors that are flying in from Europe or the US and the entrepreneur that is trying to raise money in Liberia. So that I think we have to see more of that, and we have to understand that it will take cycles for this to always. But one thing I'm sure of is that there will be local champions in every one of those categories. So it will be impossible for people to really compete with locals once we go through this round, and once we go to the level where capital becomes less of a chore, and it is now. It's taking a disproportionate amount of time of funders, where, if we can bridge that a little bit between this generation and the next generation by getting in more local investors in, I think we will accelerate, the time to that prosperity.
And Luke?
Yeah, I think with the topic being African fintech going global, I think the moment you've settled your fintech and you understand the nuts and bolts of it, a lot of that translates to other markets anyway. So I'll take Azusa. So Afrixium is this platform. It's a blockchain based, got a whole bunch of modules on top of it that we now, you've heard, rent out and sell to banks. To prove our model, we started a business on top of that called Azusa, and Azusa is a fractional investment platform. Now, this fractional investment platform has startups as clients, and we fund those startups using consumer money. So a startup would normally run for a while and run out of money at a certain point, but that they don't necessarily, they gain traction, but that when they run out of money is too early for the venture capitalists to come in. So there's a gap. We're telling consumers that for the first time ever, you can actually be part of this startup's cycle by investing early. Now, that entire thing works very well in South Africa. It translates well into East Africa, but it also translates well into the UK, and it also translates well into any consumer market where consumers have been excluded from investment because of the high ticket value of an investment. Most consumers don't have the money to invest or to put up front, the cash up front, but they do have the odd £5. They do have the odd £1 to spend, and they don't even mind spending that. So there are models that is African born that makes sense in Africa that suddenly translates overseas.
All right, I would like to take one question from the audience if there is any. All right, then I'll ask another question. All right, so beyond payments, remittances, and lending, what are some unique and perhaps interesting applications that you've seen from the industry? And let me start with the middle this time. Chijoke.
I have no idea right now. I think health tech, you're seeing some interesting investments there, a company like 54 Gene. I think that's probably the only exciting thing out, well, not the only, but to me anyway. One of the things I get excited about healthcare and education, and also ed tech. So like a company that Simdo Shagaya is doing is ULesson, where it's making classes available via on mobile apps. So it's really making it more accessible to customers, wherever they are. So that's ed tech and health tech.
Okay. I was thinking more in financial.
More
still
financial.
financial.
I mean crypto, but in some markets we're not allowed to dabble. But I mean, I think a lot of, at least in Nigeria and certainly some West African countries, crypto is the thing everyone is obsessed about because our currencies are not doing exactly well. So we need to find a way to get out.
All right.
I think I've seen some really interesting developments in the kind of credit enhancement space across Africa, different models trying to help people assess credit better, in the ambit of kind of psychometric evaluations. Many of our markets that we operate in have a dearth of credit data, so it becomes quite difficult to know who you're dealing with. So I've seen some interesting psychometric kind of evaluation techniques that companies are attempting to build data profiles that are predictive in terms of credit behavior. And then some really interesting geolocation type credit models as well, where kind of people opt in and you're able to use their pattern of movement and behavior to try and ascertain who they are, where they work, whether they're a trader, whether they have a regular cycle to their life. I will caveat it by saying I have not seen one that works, but I think that there will be some pretty interesting, when the data is large enough, some pretty interesting kind of predictive stuff that will emerge.
Yeah, I did read about how often someone texts and calls their mom correlates to how creditworthy they are.
Oh, wow.
So,
For sure. Well, they're certainly going to need a lot of credit. I don't know whether
I'm personally a big believer in what I call fintech in disguise, which basically how can you extend credit by capturing a share of wallet that right now is being spent on something else, mostly life hacks. So the best two examples I have is, I was one of the first backers of Lumus Global, which is a pay-as-you-go solar home system, the largest in Nigeria, actually the largest in West Africa. And the fact that they extend credit, but they simply collateralize it with a tangible hard asset on people who are already spending 10 times more on a kilowatt-hour basis than what we're spending here. So if you're able to put together or build a better mousetrap to capture that in a disguise of providing access to electricity, and please don't quote me wrongly, it's a terrific mission, but when you strip all the whistles and bells, at the end of the day, it's a credit lending mechanism, a very sophisticated one, which yield very nicely to us in the fund, as well as this. And if you're now bullish into solar home system, I think you missed the first wave, so you need to dive deeper into the value chain. I'm seeing similar opportunities and economics, even better economics, in the clean cooking aspect, where people are simply burning woods with all the health benefit that comes into it. And again, one of our portfolio company actually IPO'd. They're operating in Africa. It's one of the only examples of an IPO success story of what I call fintech in disguise that I'm familiar with. So I'm a big believer in those verticals.
all right.
Yeah, I think one area that is not that obvious, but is to watch, is the agent networks. And, we now, 10 years, 15 years into mobile money, we now have close to 5 million of those small and medium businesses that actually are very versed in digital. and digital finance, for instance. They're helping hundreds of millions of people every day to conduct transactions, and they're doing that themselves. And that is excluding Nigeria. Nigeria now in its own have started having this cash-in, cash-out agent. And I think as a base for things to come, it is something to watch. And certainly there will be a lot of innovation that will kind of bridge that fully digital and the offline around agent networks.
All right, Lou, last minute.
Most interesting application, read about it today, loans for the elderly, anybody 70 and up that owns their own property. There's an institution that now lends against that property, and only to be repaid, that loan only to be repaid at the instance of death or the sale of the house, because elderly people in the current credit crunch cannot actually get loans. That's a brilliant fintech application.
Okay. All right. Thank you, guys. This was FinTech going global.
Thanks, Stu.
No.